Three, two, one. Okay, before I even discuss my overall experience of getting the SBA loan, I would just want to go over with you about my day this morning. We do help the client. This client is a digital marketing company. The digital marketing company, they actually made a pretty good money from last year. They made 500,000. This year they're already actually half million. So which means their sales are going to double. There are some questions that they ask us. So these questions are as follows. The first one is, Chris, what is the difference of cost of goods versus cost of service? The cost of goods, when you are a product industry company, the cost of goods are the ones that are directly related on creating, or direct expense that are related to producing a product. So, for example, you have a restaurant. So you have a restaurant. So what are your direct cost of goods? The cost of goods are the styrofoam, the meat, anything that the buyer is paying for the straw, the menu. For example, they ordered morning breakfast with the pancake, with the eggs, chorizo, with potato. Those are part of cost of goods that you're going to have to put on your books, because it's very important to identify that, because when you're applying for the lender, especially if you're selling a product, they are actually looking for that. They want to see, after all the raw materials have been paid, how much is your take home money. It's important to identify whether you are profitable or not, but this does not include the other fixed expenses. These are the administrative costs. However, the cost of service, they're actually the same. They fall on the same category as cost of goods. But the cost of service, this is also what, when you are offering a service company. For example, you, like on my company, we are servicing tax professional. How much is our cost of service for how many tax professionals that we hire and we pay in able to do a tax return? Then also the cost of service applies to doctors. How many nurse practitioners that they need to hire to render the service on their clinics? As a massage therapist, if you have cost of service, how many of massage therapists you hired? So they are part of cost of goods, and that will identify how much is your direct related expenses. And when the bank is looking for that, they want to make sure that you are actually making the profit that you're making is more than what you're spending with these people. On the first year, you could have negative, but it should have scalability, which means it has the potential to grow your business uh, by cutting your raw materials, by cutting your manpower. So those are the things. All right. So you have to remember the cost of goods and cost of service. That's what's the difference. Okay. Now, on the other hand, I'm gonna expand more on my time. This is how my overall experience of getting an SBA loan. Uh, Getting a small business loan, we've been doing it for our clients, but the SBA loan, there are different types. This is SBA is a small business administration, but I'm telling you, they are more suitable, or they are more gearing towards real estate. Okay, when you're going to purchase a real estate, that's what the SBA can kick in. It's a guaranteed loan that they would like, and it's very appealing to them because they know they have a tangible, they have an collateral where they can repossess your building if things went south. That's the reason why, if this is a type of SBA 7A, or I think the other one is the 504. But we're going to talk more about the SBA loan with the real estate. Most company SBA, they will or the third party lender, they will not entertain so much. If you're just asking for the working capital, they make it difficult for you. But since we have our company and financial performance for the past 6 7 years, it's easy for them to know whether we are capable of paying back the loan. There are one, two, three, four, five, okay, six, seven. All right, we're going to discuss right now how my overall experience, and the initial is how to get the small business loan, the 7A. The best combination, we're talking about for people that have real estate, you have to include the working capital together with the real estate. One, two, three, four, five, six. Okay, there you go. So we're gonna discuss about the 6 different types of how to apply for a small business loan. The 7A. Number one is you have to tidy up your personal credit. It means to say, when you're applying for a business loan, they're not just looking for your business credit. They're looking for your personal credit score. Uh, my credit score is somewhere around 740 points. That makes me qualify for them. Then number two, remember they're gonna pull it off, but you have to make sure to ask them what is the ideal debt service. Okay, you have to make sure that ask first. This is my experience. Do not tell. You have to let them know before they pull out your credit score. Okay, never let them pull out your credit score without your consent. That's number one, because it's gonna affect your overall capability of applying for another loan. It's very important when are you going to pull this out, because if you see that can they do a pre-assessment, you have to ask them that can you do a pre-assessment based on my basic documents whether I'm qualified, because there are some SBA lender, I don't know, there are some banks, I had this experience, they will just pull out left and right without letting you know. You need to tell them, are you going to do the soft pull or are you going to do the hard pull? So it's very important to give you or to make you aware when they're about to pull it off. But ask them, try to bargain. Can I just have you guys do an initial assessment of my financial statements, my profit and loss for the past 2 years, and my tax return for the past 2 years? There's no harm in asking. Number two, you have to create a rock solid business plan. The business plan, this applies majority of the components: executive summary, market, and who are you targeting the market, how are you going to utilize the funds. When you are barely, or when you're starting a business, they will rely on your business plan. But if you already in the business for more than 2 years and you have a good scalability, like you're making money more than 30%, you're taking home more than 50% of the gross revenue, then the business plan will be a secondary document, because they already have your tax return, they already have your financial statements, your profit and loss and balance sheet. Okay, and then they also going to look the second. So the first one is your credit score. The second one is you have the business plan. The most important with the business plan is the market, and then how much is your budget. Now, the other thing that they're going to look at, number three, is your debt service coverage ratio. So, as a general rule, the debt service coverage ratio above 1.25 is often considered strong, whereas below 1.0 could indicate that the company is facing financial difficulty. All right. So, how do you compute the debt service coverage ratio? Again, what they're saying that the debt service coverage ratio, put this down, 1.25 to 1.5. So ideally, as a general rule, the debt service coverage ratio above 1.25 is considered strong, whereas ratios below 1.0 could indicate that the company is facing financial difficulties. On my previous videos, I discussed how to compute that, but just a recap, how are you going to compute this? So the DSCR is equivalent to net operating income divided by total debt service. Again, it is net operating income divided by total debt service. Whatever is the result, that will identify your debt service coverage ratio, whether you are in a good standing or whether you're not, because you can actually pre-assess your own business financial statements, whether you can apply for this loan. The good thing, if you have a an outsourced tax and bookkeeping company, that will help you a lot. Number four, keep your daily balance, bank balance as high as possible. There are a couple of reasons to keep your daily bank balance as high as possible. Some loans are approved based on the daily bank balance rather than the business income. Also, lenders want to know how you can have cash on reserve to make your loan payments. I'll give you an example. Since the business could be, there are seasonal companies, right? The seasonal income, for example, a tax company, most of the high income, the deposits are coming from tax season or the seasonal. I think that's the best time that you need to apply for the loan, because from January, February, March, April, May until June, you have a high amount of deposits for seasonal companies. So that's the best time for you to apply for this loan. And then also, that's the reason why another thing, do not make a lump sum transfer, especially after those slow season, and then there's a lump sum transfer from another bank account from your friend or from your tita, from your relatives. That is a red flag to the internal revenues, to the lender, because they will talk about how did you get this money. The thing is, it's always that you have a consistent transferring of fund. For example, your personal account, you need to keep an emergency fund there, at least 3 to 6 months of your monthly bills. For example, you have 10,000 of monthly bills times 6 months, you need to have 60,000. So because if your business account is empty, your personal account can save you. Okay, but never ever try to make a lump sum transfer from your friend that's within the time frame that they're checking all your financials. They can see that, they can check and monitor where is that money coming from. But there's a way to get away from it, and that tips I will show it to you when you become our clients, because this is our bread and butter, helping and reading financial statements and making sure that you have the higher chance of approving the loan. Okay, the next tip number five, my overall experience, you have to boost your business as much as possible prior to applying. When we say you can boost revenue by consulting with a professional marketing firm to launch a new campaign, there might be running PPC ads on a regular basis. Well, they just want to see that you have funding. That's why that you have enough retaining clients that go into your office every now and then. That's why I said do not apply for a loan during slow season of your company. If you are your company is seasonal like other companies in the island, they have hotels. They're only been booked regularly during summer. That's the time that you apply for the loan, and maybe you could do more like referral marketing, making sure that there are a lot of customers already paying you before you landed the loan. It's all about the timing, more than just the profitability. You also have to time for those people that 50-50, that you're not making sure whether you're making money or not. Okay, it's all about the timing, because the loan can be approved between 6 months or more. I have friends that they got approved more than 6 months because uh, they're slow season. Some of them, they don't even have a good record keeping financial statements. Their tax return is not updated. Their books, balance sheet, they don't even know what their asset and liabilities. Okay, then number six, you also have to start putting your existing loan together. This is through the balance sheet. When we talk about the existing loan, we're not just talking about the business loan. We're also talking about anything that you get for the Paycheck Protection Program. That's not a loan, but it's something that they would check. Also, they would look on your the existing. If you have an economic injury disaster loan, they will also verify it with the SBA. Well, this is an SBA. The EIDL loans, how much is the? You need to know your account number with them. It's faster. It's easier if you have the SBA EIDL account number. Then another thing is number seven. No lenders requirements. yeah, you have to know the lender's app. What did I say? How? Yes, these are now number seven is you need to know the lender's requirements before applying. Before applying any loan, you know the minimum qualifications first. You don't want to waste your time applying for loans you don't qualify for. Meeting the minimum requirements is good, but exceeding them is better. Generally speaking, most lenders don't want to see any recent bankruptcies, any delinquencies, poor business, low credit score. However, there are some lenders that make exceptions for applicants that are weak on one area and strong in another. yeah, so we talk about you have to pay attention if you are delinquent. First thing is you have to make sure if your payment are all up to date. The good thing, if you have unpaid utilities, unpaid check, all those. The exception about this delinquencies, if you have a medical bill that you have unpaid medical bill that's not part of any loan. That's not gonna hurt your credit score. That's why ahead of time, make sure that all delayed or past bills, you need to pay them before they go to a third party company. And if they have a third party company, talk to that merchant that is collecting, and then try to make sure that this is not going to show on your credit score. The other thing, make sure that your tax returns are updated. Past 2 years of tax returns are important, and they will ask you to sign a tax transcript. They will verify that with the IRS. They will not just accept the loan, the personal tax return, the 1040, from your tax preparer. They will request it from the from the IRS. Also, your financial statements together with your projections. You need to have at least 2 years of projections. Even me, we already have a good record for the past years. They still ask for financial projections on the next 2 years. And then how are we going to use it? And if we're making money, why do we need the loan? Yeah. So though they're very skeptical about it. Okay, so this is part one. We'll try to create part two and three with the other contents regarding the SBA loan, my overall experience. This is part one. Thank you. If you like this, please click share and subscribe. Again, I'm Chris, IRS acceptance agent, founder of a outsourced tax and bookkeeping company here in the US. Stay safe.